Okay, good morning, everyone. We'll be starting in a few minutes. Okay, good morning, everyone. Welcome to the Pro Trade Room Plus course CPI. My name is Lee Goldstein. I'm the trading director for 10-minute trades. Please remember that all the trades we discuss are for educational purposes. It is possible to lose money trading futures, so please trade carefully. Good morning, everyone. So I just want to remind everyone that this is an event where the margin is raised. So what does that mean? It means that we think, and we're not 100% sure, because there have been margin events where we've been able to trade normally, but the broker Ninja Trader is saying that, if you want to trade the NQ, you need $18,000 per contract. So we've been over the margin every trade room where we've had these events now, month after month after month. So the margins are high, so they say, on every, all of the instruments. And when I call the trade desk, they will not tell me which instruments are covered. So you should assume anything that we're trading is going to be high margin. Yet, on the other hand, when we traded the FOMC minutes, I believe it was, no, and the statement, when we traded the statement, we were able to trade normally as if there were no margin requirements. So I don't really know what's going on with the margin other than what they tell us. I'm just telling you what I know. This is the news we're going to be looking at. I'm going to keep it off to the side and I'll bring it in. I think it's kind of a given that the Fed is struggling. Okay. I think that is true, that the Fed is struggling with getting inflation in check. Certainly many elements of our lives, the prices have come down, but there's many things where prices haven't come down very much. So I think we're still not out of the woods regarding inflation. Now, I've been chastised a little bit in saying that the Fed is destroying the banking system. Maybe they're not destroying the banking system. Maybe they're making it tougher for the banks, but there have not been a lot of bank failures. So, there's thousands of banks in the United States. I think it's more reasonable to probably say that they are definitely making it much harder for the bankers to make a living the way that they're accustomed to. So we'll see how that plays out. Now, I know that, Eva, you think they intentionally want to reduce the number of banks? Well, tell me why you think they want to do that. Control. Okay. It's the whole control thing. All right. Okay. I don't know if I agree with that, but what's a CBDC? Wait, I want to hear this. A CBDC. What's a CBDC? Okay, a central bank digital currency. Okay. There might be some truth to that. I think the one thing that's true is that it's us versus them. It's not Republican and Democrat. It's normal people and it's the government. That's the way it's gotten. None of them are any good. And that's the truth. It's just that some of them are a million times worse than others. Okay, let's get back into a new global order. Yeah, don't mention George Soros or I'll throw you out of the room. All right, let's get going. CPI is, we don't care so much about that stuff, right? I mean, look, it affects our lives and we have to deal with all the problems that, the governments create. We have to deal with that. But when it comes to our trading, it doesn't really matter. What we're looking for is a tradable move from the event. That's what we're looking for. So that's what we want to deal with at the moment. What's going to move on this report? And we know that a lot of instruments will move on this report. The euro is going to move. The indexes are going to move. Bonds are going to move. Gold is going to move. So let's take a look at the DMM. Now, oil has been one of our trades on this report, and it's, it's not, it's still working. I personally would rather trade bonds. I like trading bonds. The gold breakout is okay, all right? It's not mind-boggling, but gold is going to move on this report. For me personally, I like to trade bonds on this report. It had a very bad trade in March. March was a very bad whipsaw for most of the indexes. So I hope it got it out of its system for a while. I'm going to set up my bond trade. It's going to be a breakout trade. And I'm going to trigger at 829.59. And I got a bracket of 7. And we've got targets between, I would say between 7 and 25 is fine. And I'm going to have a target. So I'm going to use those targets today. And the stop is 20. Stop's probably a little big. I'm not so sure the stop needs to be that big. So it's a breakout trade triggering at 829.59. Targets between 7 and 25. Bracket is 7 with a stop of 20. And I'm going to test my brackets like we always do. So we're going to set our time to 0 to test the brackets. And that should be good. Okay. Now, some folks, I'm going to put my time back to 8:29:59. That's our trigger time. Make sure my charts are normal and live because I am trading this. Now, some folks have been trading CL or MCL. Don't forget, you got high margin today. And don't forget that when we trade a report like this, the margin is double because our software is 2 orders on the chart and the broker considers that double. So we can look at the margins like we always do. Yep, it's double. A trap trade is 4 times. It's just the way it is. See if I could find, let me find my margins on the right page. They've changed, Ninja has changed all their links with the new version. I guess it's time to upgrade to the new version. I've been putting it off and putting it off. So the ES, you've got 11,000 per contract. MES is 1,100. NQ is 16,000 per contract. And I forget, they might be using the initial margin as opposed to the maintenance. It might be a little higher than that. I honestly forget if they're using the maintenance or the initial margin. I think you're right, Ali. I think it's initial margin. So assume the higher margin. It was 18,000 for the NQ. Yep, it's initial margin. 18,500 almost. So, you know, the instruments that we're trading on this report, ZN is 2,500. So that's 5,000 for 2 contracts. Okay. And you need at least 2 to 3,000 more than that to cover your trade. So bonds at least are tradable regarding margin. ZF is 1870 per contract. Gold and oil are pretty high. Gold is 9130 per contract. Oil is 6380 per contract. So you got to double that and add at least 3,000 to it. At least. Yeah, it would be any ATM, Charles. It's not our software. It's any ATM. Our software functions like an ATM, so it's a margin situation. And it's the brokers. It's not us. It's the brokers. The micros are much smaller, right? MCL is 650 roughly per contract. The euro is 3,000 per contract. I think the one I did gold, we did go over 9130. Crude, I think crude is 8,000. Nope, 6380. Micro is 638. All right, so just keep in mind margins are up. So they say. So they say. So some folks have been trading oil bracket of 10, targets of 8 and 22 with a stop of 20. I just want to make sure that if you're trading gold, you might want to just move your stop to break even pretty quickly. So let's look at what happened last month. Same situation with margins. So bonds had a nice move last month. If I remember oil, I think some people struggled with oil last month. It hit the first target, I believe, and reversed pretty quickly for some people. That's what my memory is on oil. Okay, I'm wrong. Fred, oil was great last month. It must have been the month before. It must have been the month before then that oil was a little trickier. So gold is new, okay? Gold is new with a bracket of 12, targets of 10 and 29. Gold's been moving pretty well on this report. So when I say you might want to move your stop, what do I mean? You could use the feature in the software depending on how many contracts you're trading. If you're trading two, then you could do target one stop move, and you could move your stop to break even, BE. If you're trading three positions, you could move your stop to break even plus a few ticks. So in other words, if my second target gets hit, I'm going to move my stop to break even plus 4. That's what I'm going to do. Let's check our time sync. We're going to test our time sync. So this is obviously, it's a very important report. The world is looking at. And we're going to check our time sync by going to the website time is. And it checks your computer to see if you're in sync. If you're not in sync, remember in the room drive, right? In the folder, the room drive in the trade room, you can download Karen's time sync, or you can download Dimension 4, and those programs help to put you in sync if you need to. Okay. So in March, we had a very bad whipsaw. Same situation with margin. Very bad whipsaw. Not a lot you can do when something like that happens. Now, crude, was it March that crude was a problem? Does anybody have notes for crude in March? And then in February, that's March was profitable, but it was tough to manage. No surprise. No surprise there. February, this is February. February had a lot of slippage, but a really good move. It had a lot of slippage, but a good move on bonds. And I'm pretty sure I did a significant amount of, yeah, ZN was a stop in March, definitely. I think gold was difficult in March also, Chantal, unless we use the range. I thought that I might have done some gold testing. Yeah, so I did some testing on gold. So this was gold in April. And it had a very nice move in April. Sorry, that was March. What happened in March, it looked like it was a winner, but actually it goes down and goes up, and you can't see it move up. And that caused the stop in March. In April, I thought that I recorded April. I guess I didn't. I don't think I did. April had a normal move on gold. 412. Here it is. This was April. April gold exploded to the upside. Okay, so who's trading what out there? Who's trading what? What are you trading? A lot of ZNers, ZFers. Okay, ZF can be traded also. MGC. Fred's been trading oil because it's been working well for him. Chantal CL. Charles on ZN. Larry Gold and ZN. Doc on ZN. Larry likes to do both. John on ZN. Larry, it kind of shows that, well, no, I can't say that about margin because I don't know how much money you have in your account. Chantal's not a lover of gold on this report. It definitely can be whippier than many of the other instruments. So keep that in mind. Gold can be whippier. It's had some good moves, but it also can be whippy. So what Chantal is saying, well, Chantal, don't you think we're just looking at the gold open? We're just looking at the gold open. No? It's a delayed open, really. Well, it had an open. Nope, you make a good point. Gold is extremely volatile, extremely volatile. So I totally understand what Chantal's saying. I'm going to watch gold. I'll keep gold on my chart. It's volatile. It's volatile right now. Langford, are you here? Is anything going on with Lilu? Is Lilu going to have a sale soon? All right, so we're just waiting now. I was just going to remind you to let me know about Lilu. And next week, we're going to have a bunch of bonus earnings. Some early morning trade rooms next week. Walmart, Target, Home Depot is at 6 in the morning. Okay. Home Depot, 6 in the morning. Lilu does not have nearly as many sales as Apex. They're not as aggressive in their marketing. Apex always has a sale. That's because their rules are so strict, it's almost impossible to trade with them. They have a lot of rules. All right, after this, we'll come back at 10 o'clock for oil. So we got 2 minutes to go. So look, gold has calmed down a little bit, right? It still makes you a little bit nervous when it's volatile before a trade. But we do see that kind of behavior with gold a lot. It does it a lot. Apex will not let you trade news, correct? They will not. All right, we got a minute. Just waiting. All right, 25 seconds. I think inflation will be down a little bit more. That's what I would expect. Trying to get my targets. My God. I couldn't I couldn't get I couldn't get I couldn't get my stop. It seemed so choppy. It hit my first target. It looked like it was pulling back like crazy. I couldn't move my stop because I moved my stop above the current price. Oh my God. Hold on a second, folks. With bonds, I mean, I have to learn to let bonds chop around a little bit because they chop around. I didn't see if the gold breakout was perfect or not. Larry's going to tell us if gold was perfect. Okay, Larry, gold didn't work because of margin. I got 343 out of bonds. Let's get a roll call for everybody. Let me take a look at oil. Let's take a look at oil. So margin did work on bonds, on the gold. There was no margin on bonds. What happened on oil, everyone? What happened on oil? Chantal CO was good. You can't trail close. You cannot trail close on this report. If you trail close on this report, it'll kill you. It'll kill you. It'll take you out. And we'll look at the video. Give me 1 second, folks. We'll look at the video to see why. Now, can I be brutally honest with everyone? Do you want brutal honesty? It was my sloppy trading that let me make a better profit. Because I tried to move my stop, and because I was so sloppy moving it, I didn't move it. And because of that, the price went higher and I made more money. So it was my sloppy trading that made me more money. I want to be honest about that. Had I just been patient, it would have hit my targets. So you just got to be patient with bonds. And I say that every time. Wait, Eva, you're saying you lost 562? So let's look at the video. It would only be because if you look at a one range chart, right. Is it a funded account? It's funded accounts. They're funded accounts. You can't, it's trading breakouts in funded accounts. It doesn't always work. That's the problem, folks. That's the problem. Chantal, do you want to explain it? Do you want to explain it? John, very nice. John, very nice. I don't like the MES. I don't like the MES. Eva, no joke. This is a family money trade, Eva. I know it's a scary trade, but it makes money more than 70% of the time. It's 7 out of 10. It's 7 out of 10. Denny, with funded accounts, you just have to, and I know, Eva, I know, you're going to sometimes, you might start trading when it has a bad period. It happens. It's terrible. It happens. But if we look at the year of CPI, it's been a really good winner for us. It's one of our top winning trades. Honest. I understand. I totally understand. Try the oil. Try the oil. It's been working. It's been working. Or try ZF. Try ZF. Try ZF. And funded people, Chantal, if you could give the evaluation account people any advice? Any advice? Tell them. So Eva, what I would say to you is I would not make that a rule on bonds with all trades, but on the risky ones, I would understand it. But on something like JOLTS or something like job report, Thursday jobs where bonds are working, on those, I would be less afraid because you're going to get less volatility on those reports. I guess I wouldn't make it a blanket rule, is what I'm saying. I wouldn't make it a blanket rule. I know, I'm the first one who knows how scary it could be because I've been doing this for so many years. Eva, you could not believe how many horrifyingly bad trades I've had over the years because I've traded 500 times, Ali, I totally understand. Totally understand. I'll show everybody my sloppy trade. Let's look at my sloppy trade, what not to do. What not to do. Let me just render the video. So Eva, do this for me so I could really think about it and give you a thoughtful answer. Send me an email, okay, what I would recommend to trade on bonds. And let me think about it in a very intelligent, thoughtful way, which for me is very hard, but I'll do it. I want to think about it. See, for me, even with that crazy whipsaw in March, this is a report I would trade bonds. If you're worried, trade ZF. Trade ZF. And just trade one. Just trade one until you build your confidence back. That's how I would approach it. That's what I would do. Because ZF is it's $7 and change per tick. $7 and change. Let's look at the video. So funded accounts. Oh my God, Calvin, when I first started, and I'm still doing some of the same dumb things I did when I first started trading here. I'm still totally impatient and I'm embarrassed. It's embarrassing. I'm serious. It's embarrassing. The only thing I'm glad about is I teach well. If I didn't teach well, I would have been fired long ago. But I'm just so impatient. So impatient. All right, let's look at the video. Calvin, did you trade this? Did you trade this, Calvin? And Ali, thank you for uploading the videos all the time. It's really helpful. It's really helpful. All right. Let me show you what not to do. And I'm very sorry about funded accounts. About the eval accounts. But the thing is, if you're trading news with Apex, they're not going to pay you. So what's the point of getting funded trading news if then you have to come up with a whole different methodology to get a funded account that you can get paid on? They're not going to pay you for trading news. They say it in their rules. So that's why I'm waiting for Lilu. Langford is telling me that Lilu lets you trade with virtually no rules. If it's true, that I just canceled my Apex account because I don't want to change the way I trade. I don't want to change the way I trade. I'm going to trade the same way I'm trading now. Now, if breakouts are a problem, because it's not the same as live. We know it's not the same as live. If breakouts are a problem, then you do have to make some modifications to your trading. There's nothing you can do about that. I understand, Eva, totally get it. Totally get it. These news trades they're high risk, high reward, right? High risk, high reward. Some of them are medium risk. Some of them are medium risk. Look, I'm pretty excited about the JOLTS report these days when it trades by itself. That's a pretty medium risk report. But these are very volatile times. These are very volatile times. It's hard. I think it's hard to trade in general. I think trading is hard no matter what because that's the nature of it. Now, CPI, as I was thinking, I thought it was going to be slower. All right. So the Fed, they're going to get their way and screw up the job market, screw up the banking market, screw up manufacturing. They're going to screw up everything because there's inflation. Look at Canada's building permits. So the CPI index was down. It doesn't look like it was down all that much to me. It was down a little bit. They're saying it rose slower than expected, 4.9. They were expecting 5, but it's still 5 is way more than they want. 5 is way more than they want. That's interesting, Larry, that you still got a margin error, and it probably shut down your gold trade, Larry, but it was so fast that you made money on it. That they couldn't shut it down before you made money because gold exploded up. Let's look at the video. Watching gold on the right. Gold on the right. Now, it moved up first, so it looks like it would have been safe with no problem. And that's when I tried to move my stop to safety, but the price pulled back and my stop was above the price. So I created an error for myself. But having to be forced to wait, bonds went higher. And then I should have just left my target in place instead of rushing to get out. If I left it in place, I would have made much more money. Yeah, send the vids. Send the vids. Let's look at a few other instruments. No big reversal here today. Oil reversed. Oil reversed. But oil's still struggling to go up, you know? Oil's still struggling to go up. Yesterday, oil had kind of a bullish day. Last night, well, you see yesterday, around API, oil was at its highs. It was close to the high during API. It was like 30 ticks away. So oil's around where it was yesterday, it looks like. Yesterday afternoon. So I'll bet you the euro was a good trade on this. The euro looks real good. Chantal, we really should come up with a euro setting. And I'm sure the yen, 6J, we used to trade the yen all the time on US news. The yen. Now there is a gap here. And then what other instrument do people like to trade? Calvin, you didn't trade the NQ? The NQ had quite a nice move, at least on the 1 minute chart. And then I forget, John, I think, said he traded the MES. Did John say he traded MES? Langford said he had a tough fill, but he waited and then got in profit. So that's good to hear. That's good to hear. Yeah, John S. traded the MES. Fred, what happened to you? Did you? I don't remember if you said what happened. So I'm sure the MES had a great move. So everything moved well again. In a way, okay, canceled too early. Okay, it had a delayed move. Now, Fred, I'll tell you something. That's something I've been much better at lately, not canceling on delayed moves. I just don't do it. I just fight really hard not to cancel because there's a lot of delayed moves these days. And it doesn't mean anything bad. It doesn't mean anything bad most of the time. So, you know, it's just one of those things. You have to have faith that canceling early is you can get away with it. In the old days, we could not get away with that. It usually was a harbinger of a bad trade in the old days. Now it's not. It doesn't mean anything. Very often it doesn't mean anything. So folks, do you realize that we're in a very good news trading cycle? Major reports, we've had 8 out of 10 winners, 8 out of 10. And I'm not counting Thursday's jobless claims last week. I'm not counting any of the gas or oil trades. I think one of them was a winner. I'm not counting them. We're in a good cycle right now. Bonds are trading well. They are choppy though. It's hard. It's hard to trade them sometimes. It is hard to trade them sometimes. But if you're patient, this is the lesson. You know, this is the lesson. Looking at the chart, the lesson is to be patient. Okay? Any questions? Any questions? So we've got a couple of interesting things today. Sander, interesting. M6E. M6E is the Euro micro, and it has very good liquidity. It has very good liquidity, folks. So that's a very interesting instrument you could trade on this event. If you want low cost of an instrument, that's a good instrument. And the euro's been really moving well on this report. It's been moving very tradable. I'll bet the British pound had a good move on this report. The British pound now is a more volatile instrument in general, but it had a great move today. Everything had a great move today. Everything. The frustration is the funded, the evaluation accounts. I'm sorry that we have not made it clearer about breakout trades being difficult on those accounts. But it's something that Chantal has talked about in the room quite a bit, that she has not been able to trade breakouts. And it's because their platform, their data feed, it's not really live. It's their personal data feed. It's not the same as live. So it doesn't function as fast, apparently, as trading live, because it looks like anyone that traded live did not lose money on a real cash account. It was only the eval accounts that were a problem. Now, Langford, when you said you had a problem with profit because of a bad fill, was that an eval account or was that your cash account? Eval, okay. So Langford uses Lilu, right? Langford, you're using Lilu. So they may allow you to trade news, but they're going to struggle also with the breakouts. But the only good thing is he didn't get stopped. So maybe, I don't know, maybe their data feed is a little faster than Apex, or maybe it's just a fluke. There's no way to know until we get more people trading on Lilu. Okay. So we will be back. Let's look at the schedule. We have a couple of interesting things still today. So Lewis, I mean, the reality is every trade, it all depends. I mean, what about the trade where why should you take a loss just because you're worried about statistics? I don't really care when we if you understand the DMM, when the DMM has the journal and it says 6 winners in a row, it's based on the setup that was used, not what happened in the trade room. Okay. But the reality of trading is that I personally would rather make a profit than try to prove that a setup works. It's not about proving that the setup works ultimately. The ultimate goal is to make money. And I agree with Langford. The DMM is just the starting point. There are times when if you just leave the stop alone, it'll hit your targets. But there are other times when if you leave everything alone, it'll turn a really good winner into a big loser. So it's just the nature of trading that sometimes if you manage the trade, it's going to change your statistics. We're honest and transparent, Lewis, about what we say and what we do. So we don't test the DMM. We're testing the setup. We're testing for the best possible opportunity to make a profit. That's our goal. And that's what the current DMMs reflect. They're not based on having the setup that worked the best over the last 7 months, because the markets are so volatile these days. What happened 7 months ago might not even relate to today's markets. So when Chantal and we do our testing every week. We're testing every week and we're tweaking the DMMs almost every week for the current markets. I mean, we weren't even trading bonds on some of the DMMs up until 3 months ago because bonds weren't moving. So, Lewis, you make a point that's completely valid. It's very valid, but it would not necessarily be more profitable in the long run. It would probably be sometimes yes and sometimes no, because that's the way statistics work out when you manage a trade. In other words, you could go 6 months and do the exact setup, and it might be perfect for those 6 months. And then you could go another 6 months, and if you had managed your trades, you might have had 6 months just as good. But maybe those next 6 months were terrible. It's so complicated, Lewis, in all honesty. I mean, there's a part of me that 100% agrees with what you're saying also, but it just seems to be the nature of trading and human nature that sometimes you just know it's the right thing to move the stop to protect your profit. Will it? But I understand what you're saying. You know, the statistics going out over time. It's a great point. It really is a great point. I don't know that there's a perfect answer. I know for me, I think sometimes I would be better off leaving things alone. I think for me, there are times, plenty of times, it would be good to leave it well enough alone. But also, Lewis, think about this too. Then why have features in the software that would let you move a stop? You know what I mean? It's like, it's just the whole concept of trading is, you get a profit, you might want to protect it. It's just not as simple as just having a setup and walking away. It just isn't that simple. We had a member, literally, he quit. Like after one day in the trade room, he couldn't stand the fact that we did change the setups. It really bothered him. And it was recent. He quit about 3 months ago. And he was very upset. He thought that you're not allowed. When I was originally taught to trade futures, you never moved your stop. And then I went and traded with a different group of mentors, and they did move the stops to protect their profits. So everybody does it differently. It's complicated. And I kind of feel that the DMM is the starting point. It is the starting point. Let's see what else is going on. We'll be back at 10 for crude, and then we'll be back at 12:30 for the 10-year bond auction, and then we'll be back for Disney earnings, which probably will be tricky. Disney earnings will be tricky. So I do want to thank everybody for watching on YouTube. We kept it going a long time. Hit that like button and the notification bell and subscribe on your way out. And thank you very much for watching on YouTube.